So we're doing this set 5 Cbse year 2022, sum related to cash flow. Okay. Whenever you have a sum related to cash flow, the first thing that you need to do is you need to make your format on one page properly. And your format would start, it would have three sections A, B, and C. Your section A would be cash flow from your operating activities. In that, you will write your 5 headings properly. Cash flow from operating activity. You start with net profit before tax. And the answer for this you will get from a working note. The second heading would be operating profit before working capital changes.
Yes.
Third, cash generated from operations. Fourth, tax paid. And fifth would be cash flow from operating activities. Section B would be cash flow from investing activities, then cash flow from financing activities. Then you have your NICE, that is your net increase in cash and cash equivalent. At opening, you get the closing. The first thing you will always do is you will prepare this format and keep ready and leave some estimated number of lines. So I'll wait for you. I'll pause the video. You prepare this format and first keep ready. So now over here, they want only for which activity? They want only for investing activities and financing activities. Okay, so you should read that and then you would decide that you want to make the operating activities or not. Even if you make and keep it and you just write nothing, it is okay. Okay, now we start with the knack of reading the question. So when you're reading your question, you should know that share capital. This is always related to which activity?
Financing.
Share capital is always related to financing activity, and reserves and surplus, this will always be related to your working note number 1.
Yes.
Okay, from your reserves and surplus, what is your working note number 1?
Net profit before tax.
Yeah, so you have your closing minus opening, the statement of profit and loss, and any transfer to reserves, again closing minus opening. So anything that is over here is related to working note number 1. Then you go to your non-current liabilities. This will be related to which activity?
Year operating.
The non-current liabilities are loans.
Okay, investing.
So loans. When I'm talking about loans, that means I'm taking money to use in my business.
Okay.
So non-current liabilities will always be related to financing activity.
Okay.
Okay, because you're financing your business through non-current liability. Any interest on these long-term borrowings will also be related to financing activity. Okay, and it would be also related to your non-operating expenses. That means it would come in your this first part. Over here. Are you with me?
Yes.
Okay, this I am discussing keeping in mind that you know the basic format already. Okay, now you have your current liabilities. Current liabilities, where would it come?
Operating activities.
Your working capital changes.
The balance will
Yeah.
be.
Current liabilities and current assets, they all come in WCC. So we mark it as double working capital changes.
Okay.
Okay, so shareholders' funds you will mark as financing activities, reserves and surplus you will mark working note number 1, borrowings you will mark financial activities, and even the interest on it would be financing activities.
Okay.
Other than that, this is non-operating income, it comes in your first passage.
Okay.
Current assets and current liabilities you will mark as WCC. WCC represents your working capital changes.
Okay.
But this cash and cash equivalent turns as an exception for you because this always comes at the end. Yeah,
Yeah.
sure you with me?
Yes.
Okay, fine. Now these current investments over here, where would this come?
Investing activity.
No. Only if there is like some marketable securities, loans and advances, okay, then you take it as a part of financing activities, not investing activities. In current liability, your exception that you would treat would be a bank overdraft.
Okay.
Bank overdraft would be which activity? It would be financing activities. And in current assets, your exception would be short term loans and advances.
Okay.
Okay, are you with me? Now you come to your non current assets. Non current assets, which activity?
Um.
Anything related to your non current assets is investing activities. Investing activities means non current assets. Shareholders' funds, non current liability, financing activities.
Okay.
Are you with me? Okay, so anything that is related to non-current asset comes in your investing activities. And whenever there is non-current assets, four things you always keep in mind. What are the four things that you would keep in mind?
Um. Issue of issue of shares.
No,
Dividend.
asset purchase, asset sold, depreciation on asset, and profit and loss on sale of asset.
Okay.
So whenever there is non-current asset, you will keep four things in mind: asset purchase, asset sold, depreciation, and profit and loss. These both which be which activities?
Uh. Investing.
Investing activity. Non-current asset, investing activity.
Yeah.
Share capital, non-current liabilities,
Um. Financing.
financing. I always do the marking so I don't forget.
Okay.
Depreciation on the non-current asset,
It is also added to the working note, right?
non-cash, non-operating expenses.
Yeah.
Not the working note. Working note will be statement of profit and loss, reserves, proposed dividend, then proposed dividend last year, interim dividend current year, provision for tax for which again you make a working note.
Okay.
These are the general things in the working note. Normally, only five things come in the working note. What are the five things that come in the working note? Working note number one is for what?
Net profit before tax.
Net profit before tax and extraordinary items. In that, you start with what? The statement of profit and loss.
Yeah.
This you will either have it directly or you will have it in your notes to account section. Closing minus opening. Then
Transfer of reserves.
transfer to reserves. What
Closing minus opening.
then?
Dividend paid.
Proposed dividend last year and
Interim dividend current year.
interim dividend current year
Provision for tax.
and for provision for tax again which
Tax.
working note? You make this
Current.
working note for provision for tax.
Yeah.
You have the opening provision for tax here, closing provision for tax on this side, bank over here, and the current year provisions. Correct?
Yes.
This bank will go where?
That's the paid.
Tax paid that comes as an ending of your operating activity, and this one comes in your working note.
Okay.
Okay?
Yeah.
Suppose you have no information about this and this.
Hmm.
Then opening will be paid and closing would come in your working note.
Okay.
Are you with me?
Yeah. Just give me a minute. Can I just look at that once again?
Yeah. These are some markings. When you will do the markings, you will automatically get a hang of these markings. Okay. Then there is notes to account that we will deal when we are doing the sum. Okay. Now we are asked to prepare only investing activities and financing activities.
Hmm.
We have done the markings. We are only going to look at investing and financing for now.
Okay.
Come on, share capital.
Uh,
Financing activity.
Financing.
What has happened?
Issue of shares.
Okay, your share capital has increased. You see an inflow. I am seeing an inflow. What will I go and do? I will write in financing activity.
Okay.
Then you will go and check if you have anything else in your financing activity for issue of shares. I don't see anything, so I will just simply go in my financing activity and I will write issue of shares.
Okay.
Money is coming in, so it's an inflow.
Okay.
Done. I don't want operating activities. However, I have this reserves and surplus. Can you tell me what will go from reserves and surplus?
1 lakh.
Closing minus opening 1 lakh. This would go where?
Um, Working note.
Working note number one. So anything related to reserves and surplus, we already write over here. It's my working note number one.
Okay.
Now long term borrowings,
Financing activity.
financing activity. What has happened?
Increase.
It has increased. That means there is some issue of you have taken some long term borrowings.
Yeah.
Apart from this, you see if you have any other information about long term borrowings.
No.
No. So I will just go and write long term borrowings.
Okay.
How much?
70.
70,000. But just as a general information, what could be another information on your long term borrowings?
Interest.
Interest. How would you know about this interest? There would be some percentage over here.
Yeah.
Okay. And they should mention that it is paid.
Huh.
So this interest would also go in financing activities, and other than this, it would go in non operating expense.
Okay.
Okay. Now, current liabilities. Where would it go?
Working capital changes.
Working capital changes. And in working capital changes, what do we write? Current assets, if there is changes, they are always treated in the opposite direction.
Yeah.
And current liability, same direction.
Huh.
So if I see over here, there is a decrease. Yeah.
Yes.
So this would be minus.
Okay.
But you're not making it, so I'm not currently bothered about it.
Okay.
Now come on, next. Investing activities.
Yes.
Okay. I have investing activities and I have this table also over here, which is my notes to account.
Yes.
Okay. So whenever I have assets, four things you should always consider. What are the four things that you will always consider?
Assets purchased, sold, depreciation, and profit or loss on the sold
Okay.
assets.
And you should never forget this. You should go and hunt for it.
Okay.
But now we are only concerned about making which activity
Investing.
and financing. So financing has nothing to do over here. I am only concerned with investing activity. So that means I am only concerned with purchase of asset and sale of asset.
Okay.
Okay. Now to find the purchase or sale of asset, what is it that I have to make?
In
To find purchase of asset or sale of asset, there is something that I will have to make.
the account
Relative, an
tangible.
account that is related to asset.
Yes.
Okay. You can make this account at the fixed cost also, and you can make this account at the net book value also.
Okay.
I always prefer to make the account at cost.
Okay.
What is the rule to make the account?
The opening balance comes on the debit side, closing
Hmm.
balance on the credit side.
Hmm. Whatever is
Stored on
sold
the
would come on the credit, and whatever is purchased would come on the debit. You would get one information as balancing figure if you're making this at cost.
okay.
Okay. Now, this is the information that you have. You have tangible assets and you have intangible assets.
Okay.
Come on, tell me what you will incorporate and how.
Your tangible assets opening balance 850,000 would come on the debit side.
Now, be very careful. You're making your asset account at.
Cost.
So, what you will take into consideration?
Um,
Cost.
Cost. Yeah.
Asset account at cost, take into consideration cost.
Yeah.
This is which year?
2020.
What you will take?
10 lakh.
Opening, closing. Correct?
Yes.
Okay. Then you have this information over here.
Huh.
What is this information? Assets sold.
Assets only.
When assets sold, you will make this format. Costs minus accumulated depreciation would give you the book value or the net book value.
Okay.
Now fill the things.
Cost is 24,000. Accumulated depreciation is 16,000. So net book value would be 8,000.
8,000. Very good. Which one you will put in the account?
8,000
Asset account is at?
cost. So you put
Asset,
24%.
you will put 24,000. But in your this cash flow statement, what will you put?
8,000.
How much is it sold for?
6,000.
So in your cash flow statement, four things related to the non-current asset: asset sold at the selling price, asset purchased at the cost price.
Okay.
So asset is sold for,
6,000.
where will you go and write?
6,000.
Where will you write?
Investing.
You'll write sale of machinery, 6,000. Inflow. With me?
Yes.
Now, machinery account, I will get only four things when I'm maintaining it at cost. Now whatever I will get my balancing figure as purchases.
Okay.
Hmm. So that is 1270 plus 24. What is it?
1294.
94.
Yeah.
Where we recorded
Investing activities, purchase of machinery.
inflow or outflow?
Outflow.
Outflow, that means it is in the bracket.
Yes.
There are two things which I always find. Four things related to assets should always be recorded. We are not making operating activity section, but however, I want you to work out on it. I
Okay.
got my first thing, I got my second thing.
Yes.
Third thing and fourth thing, come on.
Sorry.
The fourth thing related to non-current asset.
Um, Depreciation.
Depreciation for the current year
Depreciation for the previous year.
and profit or loss on sale.
Okay.
Come on, tell me what you want to find first.
Uh, Profit or loss.
Okay, net book value is 8,000.
Yeah.
Sold for
6,000.
profit or loss?
Loss.
Loss. How much?
2,000.
Will it go?
Uh, Credit side.
Non-operating expenses.
Okay.
Hmm? You subtract, right? Non-cash, non-operating expenses.
No, you add.
You add. Then
Yes.
depreciation for the current year. I'll give you a formula where you don't have to make the account.
Okay.
Okay, the formula is CDO.
Okay.
That means you write the closing depreciation,
Hmm.
then depreciation of the asset disposed
Okay.
minus the opening depreciation. You get depreciation for current year.
Okay.
But this is all you will take the accumulated depreciation only.
Okay.
Fill in. Closing depreciation, how much?
2 lakh.
Depreciation of the asset disposed, how much?
16,000.
Opening depreciation, how much?
150.
So you get the depreciation for the current year.
Okay. 66.
Where will this go?
Investing.
Non-cash, non-operating expenses.
Oh yeah, sorry.
So I told you that four things related to assets you should always remember.
Huh.
What are the four things related to assets?
Uh, Assets purchased or sold.
Asset purchase at which price?
Cost price.
Which activity?
Investing.
Investing activity. Inflow or outflow?
Outflow.
Then
Uh, Sold.
at
Selling price.
which activity?
Investing.
Inflow or outflow?
Flow.
Then
Depreciation.
depreciation. How do you find this depreciation?
A closing balance plus dispose minus opening balance.
Yes. Okay, you get this depreciation for current year. Which activity? You will
Uh,
write it and you will write
Non-cash.
it in non-cash, non-operating expenses. This is a non-cash expense.
Okay.
Then profit or loss on sale. Again, non-cash, non-operating expense or non-cash, non-operating income. It would go in one section. However, it's not non-cash, it is non-operating.
Okay.
With me?
Yes.
Okay. So we were on the asset section. The tangible part we saw in our notes to account.
Hmm.
Now the intangible part. This is again something new. What is it actually?
It's the goodwill patents
It is the goodwill. What is happening to goodwill?
reduction.
Hmm?
There's a reduction.
Hmm?
It,
It's a reduction or it's okay. There is a reduction of goodwill. That means goodwill is written off.
yes.
Where will you record this?
Working your in operating activities in the non-cash, non-operating.
Yes, it is a non-cash expense. Okay,
Yeah.
fine. So now we have discussed everything. We know what will go where. But here we were asked to prepare only two things, and the two things were just investing activities and financing activities.
Okay.
So my total investing activities is
292,000.
yeah. So it is cash used in investing activities 288,000, and you have cash flow from financing activity 170,000. So we are done with this CBSE question.
Okay.
Set 5 2022. It's a 6 marker. A 6 marker should not take you more than 12 minutes.
Okay.
Okay.